Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the dollar index and the FX majors going into the week 15th of July 2019. So basically going to break down some chart formations, try to work out what the FX majors have done and are expected to do this week, and also just highlight our bespoke support and resistance levels and where we're looking to taking intraday trades today. So starting off with the dollar index. That strong rejection of gains last week after Powell signalled the potential for rate cuts in the US sooner rather than later sent the dollar to the downside. Now we look to be forming a bearish head and shoulders pattern. We're expecting intraday rallies in the dollar index to find some selling interest. We didn't get all the way up to our right shoulder. If we do look to this internal wave though, looks to be 5 waves, so 1, 2, 3, 4, 5. We could still get a bounce to the upside, but there's intraday dollar strength bounces should find selling interest now, we believe. So if we reflect that back onto the dollar majors, euro dollar 5 wave count to the upside. This is a short time frame. This is the 3-hour chart. We posted a DMARC 13. We were looking on Friday last week for a corrective move to the downside, a full ABCD formation, which should have taken us down to here. We've also today got a confluence area, so we've got trend of lower lows located at 112.28. We've got bespoke support at 112.26, and we've got a 61.8% fib at 112.28. So there is scope for a move to the downside. We haven't broken that previous high, and we're still looking at buying dollar dips. So our call today is to buy this dip. We've got to stop down here and a target located around about 130, the figure. Sterling dollar, and again, pretty similar to what we're seeing in euro dollar. 5 waves to the upside. Again, not a great fan of Elliott wave. You'll see us posting wave formations on a lot of the charts, but our bespoke support and resistance levels have more relevance to us. But and the reason behind that is it's pretty hard to post or get the right formations, the right chart waves. This could be, let's just pull that down. This could be 3 and 4. It didn't overlap. That could be a 5th wave extension, but all the same, we're still looking at buying into dips. We've got a 50% fib retracement level at 125.09, and that's virtually bang on where we've got our bespoke support. So again, looking at buying into dollar strength or sterling weakness. If we see sterling weakness moving sterling dollar lower, then we're looking at taking buying opportunities. Dollar Swiss, and again, pretty complicated chart. I just want to show this time frame on dollar Swiss, because that looks like an expanding wedge pattern. Now, an expanding wedge pattern has a bias to break to the upside, so the medium term bias should be bullish. If we go to this time frame, again, is this 5 waves to the upside? This could be a head and shoulders pattern, so broke the head and shoulders, retested. If that is the case, then the target level is down here at 97.47. So at the moment, the medium-term bias is still bearish, but we're just coming up to these fib levels. So really, to sell at current levels would lack really any quality risk-reward setups. So we're looking at taking a short trade at higher levels. Now we've got a reverse trendline resistance located at 98.78. We've got our bespoke resistance located at 98.78. So the upside looks limited in dollar Swiss. Dollar yen, an ABCD formation is targeted here, which is around about 107.50. We've got an expanding wedge formation, so that has a bias to break to the downside. However, are we forming a reverse head and shoulders? Left shoulder, head, right shoulder. So we've got these conflicting views, and that's why on our daily report today we only gave dollar yen a 60% chance of actually playing out. 108.25 is our resistance level. So again, pretty poor to sell the dollar at current levels. So we're looking at selling into rallies, targets here, and the stop loss is there. dollar CAD. We had our bounce from the 161.8% fib level. Really, there's no clear indication that this sell-off is coming to an end. We've got what was support now becoming a resistance at 131.17. We've got some bespoke resistance today located at 130.60. So we're looking for sort of limited rallies in dollar CAD. This is the main target area. We've got a confluence area from the fib levels. So this is 161.8% of this sell-off, and this is 261.8% of this sell-off. So we're just looking to grind lower. And you've got to remember, we're probably now entering the fifth wave of this sell-off. And if that is correct, then they are normally pretty choppy, pretty volatile wave patterns. Aussie dollar, and again, an extended fifth wave, got up close to the 423.6% extension level, which is common in commodity currencies. Free wave correction to the downside, levels close to the 61.8% fib have found some buying interest. Now, we have got some daily cloud resistance around about current levels, so again, we're wary of these stages out of resistance, but the medium-term bias is still to the upside for Aussie dollar. We're looking at buying into dips. Today's support is 69.92, and we're looking for our target or our first bespoke resistance level, which is located at 70.60, and it's also close to that 423.6% fib level. Euro sterling, two bearish factors here. We've got an expanding wedge formation. If we look to the daily chart, we've had pretty mixed volatile trading, spikes in both directions. The expanding wedge has a bias to break to the downside. We've got, let's just move that out of the way for a second. We've got some trend line support, a confluence area really here, around about 89.55. Now, are we going to form a bearish head and shoulders pattern? So left shoulder, head, this latest move to the upside, potentially forming a right shoulder, a break of 89.55, so we're looking at actually a break of 89.50, will confirm that breakout level. Now, the target level for the wedge is down here, is at 88.30. So risk reward setup on a wedge, on a head and shoulders breakout is looking pretty solid in euro sterling. Euro yen, there's really little in the way of decent signals for us actually in this currency pair. We had a fib level here, choppy move to the upside, forming an expanding wedge. We've broken the wedge formation. That's got a target level here of 121.29, but with the daily chart highlighting a very large expanding wedge that has a bias to break to the upside. We've also got a DMARC 12 count. 13 count normally highlights the end of a trend and the start of a new upward bias, so we're looking for the sell-off to be limited. We've got a trigger level at 120.70, which is just above the 78.6% fib level, and today we're going to be looking for just marginally higher levels, 121.92, with a stop placed at 120.40. Just quickly before we finish, interesting setup, Euro Oz monthly chart, 50% fib, looks to be finding some buying interest, and then if we go to this time frame, looks to have formed a bearish head and shoulders pattern. So again, 60.70, 160.17 is the support level. We've got some resistance today located at 160.85. If this formation plays out, again it's head and shoulders, left shoulder, head, right shoulder. The measure move target's down here at 156, the figure. Okay guys, hope you have a great week and we'll speak to you again soon. Many thanks.